how can you save $80,000 in taxes? And then even just for fun, grow to 50,000 followers on TikTok. And like, dude, it's been like 4 months, man.
It has been, yeah, a really short period of time, but yeah, it's been a crazy change of mindset these past 4 months for sure.
So I'm live with Michael Hyun, and we're going to break down what he's doing in real estate, what he's doing in social media, all coming up next. Welcome to the Cash Flow Happy Hour podcast. I'm your host, Josh Baldovino, and on this podcast, we interview investors live on how they are increasing their cash flow. So let's grab a drink and get into it. Michael, well, cheers, man.
Oh, cheers. Thanks for having me.
This is the first time I've ever cheered someone live in person on a podcast. So
that's a great honor to have. So,
well, quick backstory for the audience or the audience on Instagram as well is I met you on TikTok. One of your tax TikToks popped off. You were in the Bay doing real estate, also Asian, all good pluses.
Mm-hmm.
You ended up coming out to one of our meetups. We did a short little clip together, and then since then, man, I've just seen every single week you just keep blowing up. So for the audience who doesn't know you, Michael, give us the quick background. What do you do for a living? How'd you get into real estate? And then when did this whole content creation start?
Yeah. So I'm a software engineer in the Bay Area, first off. So that's my full-time thing. And real estate is a side hustle. It's a hobby. It's a passion of mine. But I guess it really just started because I went down the software engineering route in college, did my first internship at Amazon, 3 months, hated it. It was cool. Like there's a lot of flashy things, right? Like the building is super cool. Your workspace is cool, but like the work itself, I was like, I'm not doing this for 30 years. Right. And I think that's how it always starts. And then you read Rich Dad Poor Dad. So that's what I did. And everybody goes down the same route. Eventually you hear it over and over again, but especially if you listen to like the Bigger Pockets podcast. But yeah, I tried doing a couple side hustles. I first tried Amazon FBA, lost $7,000. Yeah, it was crazy. And it's just, that's the thing about Amazon FBA. It's just, I don't know if people are still doing it, but it's definitely not as easy as people make it sound, right? And then from there, I went from that to like trying to create a online course or not an online course, but an in-person course for coding. Cause I just graduated college and I was like, okay, what can I sell that's like valuable? And I was like, well, I can teach some people how to code. So I was like, let me go to my class in college, my first year class, where she has like a lecture hall of like 200 students. And I pretty much pitched my boot camp. And I got like some people to sign up. I made back the money that I lost from Amazon FBA.
Okay.
And then the whole point was to make it into an online course eventually. So I create the content, pitch it, do the content in person, and then convert to online. But then I realized I don't have an audience to sell to. So then that led to a blog and YouTube, but it just wasn't for me. And then I got into Airbnb arbitrage, failed a few times, set one up, or I bought a home during COVID, and then that popped off. And that's kind of really just propelled me into the real estate game. And then just recently I've been learning about real estate taxes, which is, especially if you're in the higher tax bracket, it just really becomes a bigger proponent of why you buy real estate. Whereas when you listen to Bigger Pockets, nobody mentions taxes, I swear, right? Because I've been listening to Bigger Pockets for years, okay? Yeah. And the content is not really suited for higher income individuals with 2 kids and super busy. It's like, I mean, I guess it is, but the emphasis is always on cash flow. And I know this is a cash flow podcast, but I'm here to take out like the importance of cash flow and start to focus a little bit more on the back end of real estate, which is like these tax benefits that are super juicy. And so that's kind of what we're hoping to talk about today.
Sweet. So there's a few actually like maybe micro episodes I want to break down now that I have the full scope of the story. And then we will get to all the TikTok strategies and kind of what to work in. And what is it, like a week ago, I saw you hit a clip that got over 1 million views.
Man. Yeah, that was the best one so far. It was something about if you are married, like what's the best job combination to have? And it's because this is what me and my wife do. So it's not like I haven't done this or just talking about stuff that I don't really do. Like this is our primary strategy when investing in real estate. So I guess that video is interesting because my audience is mostly males, but that video was mostly females.
Interesting.
Like highly, like I think it was like 70%. So I guess it's all these like women watching the TikTok and going like, oh my gosh, like we should do this to their husbands or something. And so maybe that's why it did well.
I mean, it is fun to go back into the insights. Okay, so let's break down real quick, just for context. What does your portfolio for real estate currently look like?
So I guess you could say I don't have cash flow. I actually own 2 homes in the Bay Area. They're both around like the $1 million mark. So I got really good interest rates, but they're still negatively cash flowing. And I guess most people would look at that and say that's really dumb, but that's these 2 homes are the reason why I saved $80,000 in taxes. And so, instead of kind of trying to find a property that's going to cash flow maybe $500, I kind of would rather have the $80,000 today and have maybe a little bit negatively cash flowing properties, but in great locations. Because
that's interesting.
That's the buy and hold strategy, right? Like as long as I can hold, the idea is that these homes are going to be worth more in 10 years than they are today. So I'm fine with negative 500 because 2-3 years from now, the rents will raise and it'll break even. By year 10, I might be cash flowing a little bit, but it's definitely a slower way to do it. But as someone who's like busy doing other things, like there's a lot of different factors, but I wouldn't say that it's like the ideal investment. It's not. I'm not trying to say that these 2 properties I'm like proud of, because I'm still a beginner, right? But so there's a lot of things I would have done differently if I had the same insight as I have right now, but I don't regret it.
Well, good. Again, just for the audience, curious to know what your opinion is. Some people are investing to try and get a few $100,000, a few hundred to $1,000 to $2,000 in cash flow every single month.
Yeah.
But if you're getting an $80,000 write-off year one, like, what would you rather have? Let us know in the comments below. Whether
and to clarify, the write-off was I think I was able to reduce my taxable income by close to $400,000. So that was the write-off. But the tax savings, like I'm literally getting an $80,000 check from the IRS for my 2022 tax return. So it's not the $80,000 write-off; it's an $80,000 tax savings, and that tax savings is tax-free. So that's the biggest incentive for like what I talk about on my TikTok and then YouTube, because typically people who are W-2 employees who are paying $100,000 in taxes, specifically federal income tax, right? They're the ones who have like the most meat on the bone.
Yeah.
Right. Whereas if you're only making $50,000 a year, you're only paying, $6,000 in federal income tax, let's say. So you don't really have much tax savings potential.
Yeah.
So this strategy is definitely geared more towards, higher double income earners who are making $500, $600 million a year. The higher you go up that tax bracket, the more effective this strategy really becomes.
So for those, and we're going to break this exactly what he did, right? I think most people, as they think real estate taxes, there's the active versus passive income. And for most people on a long-term rental basis, it's all passive income or passive losses. So they can't offset their active income, but you can on certain different ways. We did it on having an active short-term rental business.
Oh, you guys did this.
We did use it on short-term, on a short-term rental, as long as you are material participating, what they say, which I think it's like average.
It's a key term, material participation. I always have to explain this because nobody ever gets this one right, material participation. But yeah, what we're talking about is the short-term rental loophole. And I talk about pretty much 2 main strategies for basically saving a lot of money on your taxes using real estate. So real estate professional status is one. And then the short-term rental loophole, which you just mentioned, is number 2.
So have you used both?
So for me, my wife is a real estate professional, so we use option 1. But the requirements for becoming a real estate professional is that you need to work in a real estate related field. I think there's 11 like designations or 11 different categories of like jobs that you can do according to the IRS if you want to be a real estate professional. But the main benefit of being a real estate professional is that you can now use passive losses from your real estate, which I had over 400 or like close to 400,000. And you can use it against your active sources of income because there are 2 types of income. There's active, which is most people W-2 and 1099, and then passive income and passive losses lives in a completely different like domain. And you can't really mix the 2 unless you have real estate professional status. And so that's the key to using passive losses against active income. The short-term rental loophole, the difference between option 1 and option 2 is that short-term rental loophole, you're operating the property, which is normally a passive business, which generates passive income and passive losses. You're depending on how you operate it, which you did, you're running it as a short-term rental. It's now considered an active business.
Yeah.
So then now when you do all these tax things, use bonus depreciation, which is my favorite word in real estate taxes. It's everyone's favorite word in real estate tax if you understand what it is, because it's the reason why you're able to generate such a huge loss. But if you're running as a short-term rental, those losses are not considered passive. They're now considered active. So you're operating completely only in the active space, and you can use active losses against active income. And so,
well, we have a quick question on Instagram here from Wen Squared. So curious why y'all use cost segs, and if it makes it's kind of far, and if it makes a difference in who you use. Okay, so I mean, we're breaking down the cost seg, and the cost seg basically is, so there's two ways to write off a property. It's either straight line, which basically means that you have value of land,
hard to explain,
value of house, and you can divide that over the course of, say, 27.5 years.
Yes.
And depending on how big your house is relative to the land, the percentage changes too, which is why some condos, that's like a pro tip I hear from CPAs. Yeah. Anyways, or you can bonus depreciate, which basically itemizes every single little thing in the house. So your roof, in a short-term rental, your couches, your TVs can all have a useful life, and you can bonus depreciate that. I heard somewhere from another tax friend that I have is that generally when the property or value of the asset that you're writing off is above $500,000, at that point it makes more sense to do the cost seg and do the bonus depreciation, because cost segs do cost a couple $1,000s. So you want to offset that somehow.
There are a lot of different cost seg options out there. So I actually did what's called the DIY cost seg. It's funny because another investor was texting me earlier today saying that I shouldn't have done the DIY cost seg. But main benefit is that the DIY cost seg is basically like a calculator, like an online calculator. You input how many things that you have in your house. So how many washers and dryers, how many, how much LVP, like what percentage of your floors are covered in LVP, what percent is carpet, because these things cost differently. So you put in all these inputs, right? And how many light fixtures or whatever. And then at the end, it basically spits out basically a value, right? And that value indicates how much bonus depreciation you can take for that calendar year. So cost seg, simply put, does two things, right? Within your rental property, it's made up of a bunch of different things.
Yeah.
All it does is it breaks down the components within that property into different useful life buckets. Yeah. So basically, it's going to say this microwave has a useful life of 5 years. These floors have a useful life of 15 years. The foundation has a useful life of 27.5 years. So that's the first thing a cost seg does. And then the second thing it does is for all those buckets, it totals up the value for every single component within that bucket. And then bonus depreciation is when you can take the value of every single component in the 5-year bucket and the 50, basically anything with a useful life of 20 years or less. You can take in year one. So for me, I bought a $900,000 property, did the cost seg, turned out that I had about $210,000 worth of components in my rental property that, had a useful life of 20 years or less.
Yeah.
And so that was my bonus depreciation deduction for year one for 2022. But then bonus depreciation was at 100% that year.
Yeah.
Now it's at 80%. So last year I was able to take the full $210,000 deduction in the name of bonus depreciation. But if I bought the exact same house today, I would only get 80% of that $210,000 value, right? So that's why there's some urgency, because next year, bonus depreciation is phasing down to 60 and then 40, 20 until it, eventually disappears. But I have a strong gut feeling that if Donald Trump, not to get political, but if he gets into office, he's the one who actually bumped it up to 100% back in 2017. It was 100% from 2017 to 2022. So not saying that making any political statements, but if that were to happen, I foresee that might happen.
Well, now we have a clip to see if that'll actually happen in a couple of years.
Yeah. I'm not making any predictions. I'm just saying, he was the one who put it up to 100. Yeah. So if he becomes president again and we are in a recession by then, I'd imagine that that's what he would do.
So I do want to get into specific examples. Before that, one follow-up question from Wen on Instagram was, who do we use? He did DIY approach, which means he did it himself. I used Yono Weiss, who I think is probably one of the most.
He's like the cost seg king according to Bigger Pockets. So yeah, his was I think for my property he quoted me like $3,200, but mine's a single family home. I think it's a little bit more expensive.
Well, so I use it for a single family home for a short-term rental, and he actually did it completely remote. So we sent him pictures and videos of the listing, and then he had some clarifying questions, and then he just came back with a report, and that was that.
Okay.
But there's different ways to go about it.
I thought somebody actually comes to your property, but I guess pictures do well, just fine too.
Yeah. I mean, I'm obviously saves some time too, right?
Yeah.
And expenses.
Better that way.
So, okay, how you can actually get to this $80,000? How about let's draw up two scenarios.
Okay.
If you're single, and then probably taking it the step further, the real icing on the cake is if you're married, right?
Yeah.
So if you're single, in the way that you did cost seg, how could you do it?
So again, first thing you're gonna have to choose real estate professional status or short-term rental loophole. Okay. If you're working, so again, question is, can you become a real estate professional? That's 750 hours per year. That's like 15 hours per week for an entire year. Okay. If you're a single guy or single girl working W2 40 hours per week, you're most likely not going to hit that, because one other requirement is that you need to be working in that real estate related field more than any other job. So if you're working 40 hours at this job, you got to prove that you're working 41 hours in this real estate related field.
Yeah.
And that's hard to do. That's why if you're single, immediately I always say short-term rental loophole, or quit your job and become a real estate professional. But if you're making $300K as a software engineer, like why would you do that, right? So if you're that person, you want to go for the short-term rental loophole. I would say the only scenario in which real estate professional status really makes sense is when you have, for example, one high income earner who's making active income, W2, 1099, or has a business income. And then the other person is maybe making like a fraction of what the other spouse is making, right? And so that for that spouse, so for example, like dentist and stay-at-home mom, right? For example, right? So the dentist makes a lot of money, but they're paying the full amount of taxes. So for that stay-at-home mom, right? She can be a real estate professional part-time, but then be stay-at-home the rest of the year, right? Because it's only 15 hours per week, so part-time job, right? And then they qualify as real estate professional. And then now they can use all those losses from the rental property against that active income. And the great thing about real estate professional status is that you don't need to run a short-term rental, which is a lot of work, right?
Yes.
Whereas if you go down the short-term rental loophole way, you have to be not only run the short-term rental, is like you also have to actively be materially participating, which means no property manager, at least for that calendar year. You need to be the one doing pretty much like most of like 90% of that work. Now, in order to materially participate, there's 7 tests. So as long as you pass one of these 7, you can claim material participation. So I guess you could say the combination is real estate professional status with material participation. That's option 1. And then option 2 is short-term rental loophole plus material participation. So it's the same concept, material participation, but it's 7 tests. But the one I see used most, the one that's talked about the most common test is the 100-hour test, which basically means if you were to buy this short-term rental, you need to be basically materially participating in this short-term rental business for at least 100 hours per year and more than anybody else. So that's the test that I see being used the most. So basically go buy a short-term rental, furnish it, track your hours, right? And you can track like the time it takes you to buy the furniture, the time it takes you to set up the furniture. And to be honest, it takes like a week to set it up. So you can probably knock out like 70 hours of your 100 hours just from setting it up, right? Or maybe even the full 100 hours. I don't know. But that's how you get material participation, is you pass the 100-hour test and you track your hours in a spreadsheet. And so,
So can we apply this to a specific example? So let's just say someone's joint income with the spouse now is $300,000 between both of them.
Okay.
Yes, and make numbers easier. Let's say that their bonus depreciation was $200,000 that they were able to take.
Okay.
So how does that factor into how much taxes they're paying then?
So so rental real estate is actually pretty simple, right? It's just a comparison between income and expenses or deductions, right? So when you compare those two numbers together, you're going to be left with like a profit number, right? So for example, my property, well, you said $200,000. So let's use my property, for example, because I did get a $200,000 deduction, right? For my $900,000 home. Yeah. So again, that $900,000 home brought in, let's say, $30,000 worth of income. Is that right? Well, I bought it like towards the back half of the year. So to be honest, it was more like 15,000 because I only rented it for like 4 months or whatever. Right. So let's say it brings in 15,000, right? You have $15,000 in the income column. But then just accounting for bonus depreciation alone, you got $200,000 in the deduction column. Plus I got mortgage interest. I got my property tax, property insurance, all those things you can deduct, along with like I put some, new paint and new whatever, like repairs or whatever. So that all piles up in the deduction column, and you compare those two columns together. And for me, I was at negative, like I think negative 200,000. So that is considered a passive loss. That's what we're talking about here. Now, the next question is, which strategy are you going to use? Are you going to use the real estate professional status or the short-term rental loophole?
So in your case, your wife.
Exactly. My wife is a real estate professional. So we went with option one. But to be honest, from like 95% of the consultations I do, it always ends up being like, hey, you guys should most likely do the short-term rental loophole, especially because we're already halfway into the year. Like, how are you going to get real estate professional now? Right. So for most of the people, I end up suggesting short-term rental loophole.
Yeah.
But basically, when you have that $200,000 of passive losses, that's where one of those two options comes into play, right? You're either using real estate professional status or short-term rental loophole so that you can use those passive losses, or in the case of short-term rental loophole, technically it's not passive loss, it's an active loss, but you're reducing your taxable income by $200,000. So again, if you were making $300,000, instead of reporting to the IRS, hey, as a couple, we made $300,000, now you're reporting to the IRS, we only made $100,000. And so the tax savings between those two numbers is what you're going to get as a refund, right? So if you're 300K, I don't know how much tax do you pay?
Let's
like
just say you're
$60,000 or $70,000 maybe. I don't know.
Let's just say you're paying like 50% in taxes, right? Which means you're paying like 100.
Yeah. Well, if you're married, you're not in the highest tax bracket. You probably pay like maybe 80K in taxes, and if you go down to 100, maybe now you're paying like 20. So that'd be a savings of like what, 60, 50, or somewhere around that range. So I can't do exact numbers, but that's the idea. The numbers are not, don't get caught up on the numbers, okay?
Yeah, you basically go reporting $300,000 and then paying tax on that versus paying tax on 100,000.
So let's just say you save like 50,000.
Yeah.
Right. Like that is crazy because that's tax free, right? And so the idea is that year after year, if you keep doing this and you're saving $50,000 in tax free money, you can use that money to go buy more real estate the year after. And then that real estate is going to save you $50,000.
So question, what are you doing with the $80,000 write-off?
So I'm buying another $1 million property. And that property is going to save me like another $70,000 in taxes for 2023. And I'm going to use those $70,000 to go buy another $1 million.
Wait, so are you buying an owner occupied, or how are you buying that with?
No, so
I'm guessing you're just putting more of your own cash too.
Yeah. So I'm saving my own money from my W-2, right? And just from, my W-2 and our living expenses, we're able to save up, let's say, $150,000 per year, let's just say, right? So tack on my tax savings of $80,000, now I got $230,000. So you can really tell the difference over time when somebody, utilizes this strategy, because if I didn't do this, my purchasing power every year is 150, because that's how much I save every year. But if you utilize this, right, your purchasing power now increases by $80,000 every single year. So, and you're using that money to go buy assets, right? And so when we talk about growing your net worth, it's all about liabilities versus assets, right? So the whole idea, I guess, can be summarized by this like quote that, I don't know if you know who Edward Collins is, but he coined this term called compound asset acquisition. It's really complicated, but all it means is buy assets that help you pay less taxes, and then roll over those taxes, which you would have otherwise been paying to Uncle Sam, to go buy more assets. And this is the fastest way to acquire assets, right? Because you're not paying taxes.
I like it.
That
sounds like a fun strategy. Let's pivot though.
Yeah.
From tax savings to social media and TikTok.
Let's do it.
I mean, TikTok is an interesting beast. Why did you pick TikTok, first of all?
Yeah, I think we talked about this before, but basically I'm shy, okay? And I don't want to put my face out there for everyone to see, but I'm genuinely passionate about this stuff. And so what happened is January of this year, I would not stop talking to my wife about this stuff. And she was like, okay, dude, you need an outlet. Like, why don't you just post on TikTok and just stop talking to me about it, So I started posting on TikTok and I didn't really get much traction. And then boom, like I posted this one video about how I lost $7,000 on Amazon FBA. And I guess people love honesty. They love transparency. And so I got like 10,000 followers just from that, right? And so I think it's pretty easy relatively on TikTok to get followers compared to like YouTube.
Yeah.
And so that kind of built my confidence to the point where, I reached that next step where I was like, okay, I can post on TikTok. I'm getting comfortable. And so I, invested in some equipment, started doing a little bit more. And now like I've gotten to that point where I have enough confidence to like put my face on YouTube. Right. And so kind of spreading out. And then obviously the content that I'm posting is much better suited for long form, like 10 minutes, because the stuff that I'm talking about is not easily explainable in like 2 minutes. People always get mad at me because I always leave out stuff. I'm like, dude, it's like a 1 minute video. I can't explain this stuff in 1 minute. I need to leave out something, right?
Yeah,
But
they'll always
TikTok
get mad in the comments.
Yeah, TikTok is the easiest to create content quickly
Mhm.
without like post production, right? So I
Very
don't
true.
need editing, right? I just stick my phone in front of my face, talk for a little bit, and then we're good, right? But then,
So I have a question. What
Yeah.
is your video structure when you're thinking about? Okay, this is a subject. How are you thinking about the content bits and the structure of your video?
yeah, you know what? In my opinion, the hook is probably the most important thing.
Mhm.
So when I think about video content, I'm not thinking about the content of the video. I'm thinking about what can I say in the first 3 seconds that are gonna hook people in, and then
Yeah.
I'll think about the content later,
Yeah.
right? So I'll say like, this is how I saved $80,000 in taxes, right?
Yeah.
And then whatever I say after that is, they're already hooked in. They're ready to listen, right? But if you start off slow with a bad hook, it's hard to get people to listen, right? Because you only got like 1 second to hook someone in, because there's thousands of people videos, right? So that's kind of how I think about it. I'm always thinking about the hook first, and then I can follow up with the
So
content.
For your hooks, what are your go-to like hook
I don't have
prompts?
I don't have a go-to, but I think if you sound too pushy, like, yo, what's up? This is how you do it. Like,
Yeah.
No one's gonna listen. So
Yeah.
it needs to be kind of casual. Like you need to like invite them in rather than like yell at them. You know what I mean?
Yeah.
And that's kind of my approach. So then like I think who was it? I think it was Alex Hormozy. I learned a lot of stuff from Alex Hormozy. Like he has a video on YouTube. It's called like watch this 55 minutes if you want to learn about like social media.
Mhm.
That one is really good because main point is it's all about value.
Yeah.
Right? If you can provide, content creators know this. Like value is the most important word, right? If you can provide something that's valuable, right, then they'll follow you, right? And so my value proposition is like, hey, look, you just paid $100,000 in taxes in 2022. Here's how you can pay $80,000 less. Like that's a pretty powerful proposition, right? And that's pretty much why some of those videos do well, is because that's a big pain point. So
I also think a lot of people don't talk about their own finances,
that too.
which makes it like, oh, this is something that's traditionally awkward,
Oh,
but he's making it not awkward. Like, here's how much I'm making, here's how much I save in taxes, here's how you can do it too.
Yeah.
Once you talk about how much you make, it's like, oh, it's weird. And then your friends watch it and you're like, what? It's weird.
It is weird. Yeah. It's funny because I actually follow one of the first people I follow on TikTok was a guy named Dollars with Drew.
Mhm.
And he has a video out there that's like, hey, I'm Drew. This is my net worth. It's like 500 something thousand.
Yeah.
And like, blah, blah, blah. Like, this is how I got here. So it's super transparent. And I was like, oh, I like that video. I'm going to do the same thing. And I did that. And immediately when I published it, I was like, that was a mistake. Cause like, this is so awkward now. Everybody knows now, right? Like,
Yeah.
But in my mind, it was like no one's gonna trust some like 25-year-old Asian kid or whatever, right? Like on TikTok talking about finance. Like, why should I take advice from like? I feel like that's why all the old people on TikTok like get a lot of followers, because people just assume that if you're old and you drive like a Mercedes or whatever, you know everything about finance. But like, this is why I felt like I need to gain some like credibility by putting that out there.
Yeah.
But I realized I as long as what you say resonates with people, you don't necessarily need that. So I kind of have not been doing that as much these days.
Yeah, that is interesting. I know when I started to post more about real estate on my own channels, like the door count in the in the bio profile, 10 doors, 20 doors, 50 doors, 100 doors, like that was. I remember putting my door count when I started, and then it went away, and then I took it off. I was like, it doesn't really matter anymore. And then I think about it too, of like, well, what if I added it back in and then look at my profile? Does that help with that social proof immediately? What do you think? Should I add it back in or not?
Honestly, people do gravitate towards success, right? Like they need to see that you're doing well. Otherwise, why would they follow you? Right? That is a part of it. But if you can prove that with the words you say, I feel like it's a little bit harder, but like, I don't know. It's because I was on TikTok live the other day and there was like this college kid who was like, my net worth is like $200,000. Ask me anything. But I was doing the exact same thing. So then I was looking at his life. I'm like, dude, that guy is like, like, who does he think he is? Right. But then I realized like I'm doing the same thing. So that's why I stopped doing that. Cause like, I feel like no matter what you say in that live, it's like tough to not give off that, image. Exactly. Right.
Yeah.
So like, no matter how I try to put it, like, it always came off as, or in my mind, like arrogant, right? So then that's kind of why. But I think the doors thing is okay because that's just like I don't really take it that way. But if you're putting your net worth out there, that's definitely like on a different level. So
I have also done one of those net worth lives too.
It did well. That's the thing, though. It did well.
Okay. So what are your just thoughts on like going live on TikTok? Is it worth it or not? And how much time? Like you were going live like almost every single day at one point. I feel like.
Yeah. No. I mean, TikTok is. I feel like just the loyalty from your followers is not as high as like Instagram, YouTube. So even though you get 10,000, followers, I would rather have like 1,000 YouTube subscribers, in my opinion. Just because YouTube, it means that they're willing to watch a 10-minute video, right? So it's more loyalty. But by going on TikTok live, all of your followers are notified that you go live, and then they tune in, and they once we're not loyal, but once they tune in for 10 minutes and you catch them on a 10-minute live, and they listen to the whole story, it's your way of convincing them that I'm worth listening to.
Yeah.
Right. So that was what TikTok Live did, and TikTok Live, and it's interesting because like all the videos I posted, right, I always had that link to schedule a call with me, like a one-on-one call, no bookings, right? But they all came from TikTok Live, right? So because you can't establish trust in a 1-minute video where you're scripting, your video.
Yeah.
But when you're real and you're like on TikTok Live and people, can get immediate feedback from you because they ask you questions, you answer with a really intelligent reply or whatever, that builds a lot more trust than you posting like a 2-minute scripted video that kind of applies to them, but doesn't really. So then that's how I got the consultations. That's how I made my initial money on social media so that I can fund my camera, my like YouTube setup. And then, so basically everything, all the profits are going back into the business. The TikTok Live money is my social media money, basically.
Gotcha. I mean, I completely agree. When you go live, you can't BS it, right? Like if you're on Instagram Live, you're answering questions, you're on YouTube, whatever it is, they ask you questions and you either know it or you don't, and people can sniff it out really fast.
Yeah. They can tell immediately if you know what you're talking about. Right.
So the best way I think to build trust is to go live. And then to your point too of going live, everyone gets notification. That's across all social medias.
Yeah.
So if you're on YouTube, if you're on Instagram.
Dude, Josh is one-upping me hard right now because he's got like the YouTube setup and the Instagram going, and I'm going on TikTok Live. Like, I don't know. He's got a crazy setup here. But yeah. So I just remembered Alex Hormozy, right? He was talking about social media and like how to grow a following because he's gotten like, 1 million followers and he's relatively new. Basically, he said, like, look, if you want a big following, you need to be worthy of being followed, right? You need to do cool shit if you want to be followed. If you're a college kid with a net worth of $10, no matter what you say about finances, no one's going to trust you. If you are, billionaire, if Elon Musk made a financial channel, right? Every single person would immediately follow him immediately, right? Because he's done shit that proves he knows what he's talking about. So, but it's hard for me because I haven't really gone that far. Right. So that's kind of made me question the social media journey too. It's like, have I gone far enough to even, be worthy enough to like create a social media channel? But I think it's not just about like providing content, but I'm getting a lot out of it too. Right. Because I'm meeting cool people. Like I met you through social media. Right. And then, so it's not just like me providing value, but I'm also getting a lot of cool stuff. I'm, get to meet a lot of cool people and a lot of, it's not just people looking to learn from me, but like a lot of advanced investors are reaching out to me and just, saying, hey, let's talk and like, let's talk about real estate. And so I learned a lot about from those people and they come from TikTok too. So
that's why you need to start a podcast. Because if you want to get into different rooms and circles, starting a podcast is the easiest way.
Because if you don't have a platform, it's hard to invite those people to your social media because they get nothing out of it. Right. But if you start a podcast, it's genius. Like you can, not only do you get free mentorship, right, from people who are smarter than you, and you get to trap them here for like an hour and ask them everything that you were wondering, right? But it's also, you actually get to like connect with them, right? And so yeah, maybe that's the next evolution of my social media presence.
I hope so. And if you're listening to this too, and you want to pick someone's brains, just start a podcast. Obviously, pick your friends' brains first. That way, there's some proof and some track record in your show. And then once you get to a certain point, then hopefully we can both get Alex Hormozy on our show. And that'd be super cool.
That's how you know you reach the epitome of success, if you get Alex Hormozy.
So what is next for you? You are, obviously you're doing well in your W-2 career as an engineer. You are investing, and then social media has just started to pop off. Like where's Michael heading?
At first, the social media thing was like, okay, just provide value. And, I didn't think I was going to make that much money from it. And I don't, right? Because I don't do any brand deals or sponsorships. I just post content, just, basically giving content that I would have found useful to myself and not really anything else. Because that's not really my territory, right? So I'm just pretty much putting out stuff that helped me. But the thing is, there's a lot of people who are in the exact same position as me. So they're the people who are following me, right? But ultimately, a lot of my content, especially tax savings, when you talk about tax savings, that's, typically higher income individuals, higher tax bracket. I realized, for me, I want to go into real estate full time eventually. So when you said you were into syndication, that's something that I really wanted to learn about. And I have been learning, but that's how you get to the next level, I feel like, because you can use all your money, but once you're out of money, you need to go use someone else's money. And so the thing that I realized is that, look, I am not acquiring, but I should say, like, I'm building a community of high net worth accredited investors. So how can I leverage this eventually, right? So the idea is that eventually, right, I acquire like all the trust from all these high net worth individuals, and then I go start my own syndication. And at that point, they've been following me for 3-5 years. They built that trust. They know that I know what I'm talking about. And so eventually when I go ask them for money to invest with me so that I can give them a good return, they're going to be like, sure. And that's exactly what happened for people like Brandon Turner, right? Like you see him, he built his own portfolio first, right? And he did a great job. Like he's financially free. He owns hundreds of doors, right? And then when he went and started his own syndication and was like, hey, give me $10 million, literally everybody lined up at the door to give him money. But if he had not had that social media presence, it wouldn't have happened. So this is a long game, like, right? That's where the money's at. But I don't know. It seems like a little bit like I'm trying to like get their money, but it can be a win-win situation, right? So
I mean, that's syndication is a win-win.
It's a win-win-win, yeah.
So my question is, when you're talking about accredited investors, do you think accredited investors are on TikTok?
Oh, for sure. Yeah, for sure. Definitely not a high percentage of viewers, but in general, they're not very high percentage in society, right? But like, they are out there. And actually, I probably do like maybe 6 to 8 consultations per month.
Okay.
All of them are making over $300,000. So they all come from TikTok. So if that's proof enough that they are on TikTok, because they're definitely not coming through my YouTube channel because I definitely don't have enough traffic there. But TikTok, they are there. And,
I wanted to ask you that because the last multifamily conference I went to, which was Joe Fairless's best ever commercial real estate conference, I was one of 2 people out of 2,000 people with a camera, like vlogging the conference. Really? And then we did like a mini meetup about content creation and different platforms. And everyone immediately wrote off TikTok. I'm not going to post that.
Really?
It's not. And so I wanted your take on that, just because
that's a huge mistake.
That's what I was saying too.
It's a huge mistake.
And it's even there's less people who are talking about it in that space, which is almost even more reason why you should be on TikTok talking about it.
Yeah, I mean, it's just it's ridiculous. Like sometimes I feel like the numbers are like auto-generated, like they're not real numbers. Like when you see a video that gets like 1 million views, I could never do that on YouTube, right? But I will say at the same time, you would expect that once you get 1 million views on a video that you would get like 1,000 consultations. I got like 3 or 4 after 1 million views, right? So that tells you a little bit about TikTok loyalty, right? Or the followers that come from TikTok. Because that video got me 10,000 or 11,000 followers and only 5 consultations, right? Or maybe even less. I don't know if it came directly from that video, right? But so that's the thing, right? All my consultations still come from TikTok Live.
Yeah.
Right? But yeah, TikTok Live it's still a great way to funnel attention, because I think TikTok is still the best platform to gather attention, because there's like 1,000 times more eyes on TikTok right now than there are, on Instagram, or at least actively. Because every time I post a video on TikTok, I can easily get like, let's say 5 to 10,000 views. If I post that to YouTube, I'm getting like maybe like 800 views, and I can pump out a TikTok video every like I can do one three times a day.
How do your shorts do? Do you post shorts on YouTube?
No, not seriously, because the shorts platform is just terrible at making videos on. Right? You can do it like in post production.
Oh, because you're making all of your videos on the
here's
TikTok
the thing.
app.
I heard that making the videos on the app gives you an SEO boost, right?
Yeah,
because they want to keep attention on TikTok. So if you're posting YouTube content that's recut or in post, you cut it up and you put it on TikTok. I heard it doesn't perform as well, but not completely sure. And to be honest, that's more work, right, than me just holding my phone up to my face and just clicking the button, and I don't have to do any post. So that's the main reason why.
I have, and so I've been testing this with my clients and myself. I found that if you use a third-party scheduler, they for sure suppress your views. So if you were to use like Metricool or HubSpot or something to post for you on these platforms, Instagram, I don't find that problem at all. Reels on Facebook or YouTube, I don't find that problem. But TikTok, like it went from, a few thousand here and there to then, there's like 70 views. Like it was a hard suppression. But I found that still posting if the video is good, it'll pop off. But I normally will then use the scheduler for every other platform, and then use the TikTok desktop app to then post.
Yeah, you can definitely do that. Yeah, I haven't really been using the TikTok desktop because, like I said, I just do the phone. Yeah, it's just quick, easy, and I like to think that the videos that do really well on TikTok are like genuine videos, and when you do too much post-production, that's kind of like a YouTube thing. Post-production is if I posted a TikTok style video on YouTube, it would sink and burn, right? Okay. But like YouTube, the quality of video is, you really need to compete on that front. You can't just post some like video that you took on your phone and post it to YouTube. It's not going to do well. Everyone's expecting a well-edited video. But TikTok, I feel like it's almost the opposite. They still, I just think it's somewhat the opposite. You can, I don't know, but
you want to feel raw in person, as if you're right there.
Exactly. That's that genuine aspect that you might get with TikTok that you definitely don't get on YouTube, and not even on Instagram.
Okay, well, another question. You posted a few of your YouTube videos on TikTok. Now that TikTok can allow you to do longer form, how do those post for you?
Yeah, they didn't do that well, but I noticed that the comments on those videos were much more engaged, right? They weren't just like, oh, nice video. It was like, wait, so how do I actually do this, right? Like they're more serious comments, right? Whereas like some other comments are like, you're dumb or whatever, right? So it's like the quality of comment was definitely better, but it definitely didn't get as many views.
Gotcha.
But I think if you mix in some short form with long long form, that's good, because that's the main thing. But the reason why I started is because there's this like finance girl on YouTube named Nisha, and she's been doing that
from the UK.
Yeah, and her videos get like 300,000 views each time she posts like a rerun of her YouTube video on TikTok.
Oh, she's been on TikTok too?
Yeah, she's been doing that. And so I was like, I've actually been copying her a lot.
Yeah.
But
she has very little post-production on her things too.
Yeah, I mean, see, that's the thing. It's like, for me, it's like it's never been about the production. Because I see people who are terribly, like they have terrible post-production, but they still do amazing, right?
Yeah.
So that's why I was like, look, I mean, post-production is a whole thing you have to learn. And maybe I'll get to that point eventually. But right now, I'm just doing one YouTube video a week, a few TikTok videos, and then I haven't gotten to the Instagram space because, like I said, all my friends are there still. So I'm not willing to, like, even though they've all seen my content at this point, like for some reason, I don't want to bombard them on their Instagram feed with my content because I'm embarrassed. But maybe we'll get there, because your Instagram following is good, right? Are you reusing some content? Or
I mean, I post exactly the same thing as TikTok and Instagram. There was no difference. I do use Instagram stories more than I've ever used TikTok stories, though.
What's the time limit for Reels?
90 seconds.
Okay. Because Shorts is 1 minute. So that's another reason why I can't do Shorts.
So I only do 1 minute. I only do 59-second videos.
Oh,
because
interesting.
I never like it's the same exact thing across every single platform posted at the
But
same exact
how do you time it to 59 seconds?
I post produce everything.
Wow. Okay, that's crazy. That's a lot of work.
But even if I were to do something on my phone, I would use an app like CapCut.
Right.
And then I would make sure it's less than 59 seconds. So then and then at that point it'd be TikTok caption, and then post to Instagram, and then straight to
Yeah, you know what? I don't know how I can give so much. Like, I need like a value bomb, right? Like, I don't know how I can do that in 59 seconds. Like, that's like intro, meet and then close it all in 59 seconds. That's
Super
tough.
short.
Like, you literally have 2 sentences to make that person think to yourself, like, holy shit, I should follow this person. Like, that's how do you 2 sentences? Like, that's so tough. I know your clips are like, I saw one recently where he's like, I made $300,000 in like a couple minutes or whatever. Yeah, that's crazy. But like, I can't keep coming up with things like that. Like to that level of craziness, like every single video, right? It's like, it's tough.
So my hook tip is whatever the end result is, just put that first. Right. So if you said like, dude, what's the craziest flip you ever did? Dude, I made $1 million on this deal. That's the hook.
True. Yeah.
Right. I saved $80,000 on my taxes. That's the hook.
Yeah.
And then you tell the story. But a lot of people will say, here's the best tax hack I ever learned. And I bought 5 doors and I go through this whole thing, but no one cares at that point because they don't care about you. But if you start with like, here's the end result, it's amazing. That's why on cooking shows, they show the food first. Right. And then from there, they go into like making it. But it's always end result first and then the process.
That's true. That is definitely true.
So
yeah, that's good. I mean, I think again, like I'm pulling all of the stuff that I'm talking about from the 55-minute video from Alex Hormozi, but I think his stance on that was like that is true, but again, like it comes back to like, why should I follow you, right? Because even if you get to give an amazing interview, it's like, but like, well, like you're just the interviewer, right? You're not the one who like technically are saying it, so why should I trust you? Because you interviewed someone who I might not like trust, but then like, why should I follow you? Right? Like, so then that's why like the podcasts are, I probably should get into it, podcasts, but ultimately it's the question of like, why should I follow you? Like, what can you give me that no one else can give me? And that question is like something that it's so hard to answer. Well, you can answer that question.
I can for you here.
Okay, sure.
Gary V, it's an and game, not an or game.
Okay.
Right. So you would not post just interview posts. You would still also have, here's my story. Here's this. Here's a reaction clip. Right. It's all and, which means that here's my talking head video, how I saved $80,000.
Right.
Next to it is then next to Brandon Turner saying, hey, here's the interview with Brandon Turner that I did. Here's the interview with this another big financial, celebrity that I did with Dave Ramsey or whatever.
Yeah.
And that's like social proof. Oh, he's also doing it too.
Right.
And so you mix those together and then it makes sense.
Yeah, definitely does. I think, it's definitely good, the content that you're putting out, because what I realized about my content is that I'm saying the exact same things over and over again because I don't have that much variability in my content. It's just like because the thing is for me, right, that bonus depreciation stuff that we talked about earlier, that's like the meat of my strategy, right? And so I just want to keep pushing that message. But then if you follow me, then you're just going to hear the same message over and over and over again, right? So then I don't know. Maybe I branch out. Like Dollars with Drew did like a video about like how he chooses the watermelons or whatever. You need a little bit of that to have the audience feel like they know you a little bit more. But if you're just like a talking head, talking about the same thing, you're not that personable. I need to get a little bit better at that. You're definitely better at that than I am. But I don't know, because I like kind of being more just like giving the facts.
Yeah.
But I realize people follow you because they like you also. Like you have to be valuable, but also like they like you. For example, like I think Rob Built, right? If you know who that, he's a host of the Bigger Pockets podcast. I think the reason why people follow him is because in his videos, he portrays a lot of his personality and he has a great personality, right? And people like watching him. Right?
Yeah.
Like it's like almost like a TV show. Like he's funny. So you watch him and then also he gives you these amazing advices, right? But then I don't know, for me, it's hard to like convey that type of personality through video too. Cause you have to like, there's like post-production tricks you have to do. And like, you know what I'm saying?
There's a persona you have to put on.
Right.
And it's tough.
That's tough. Yeah. Portraying like an image, a persona. It's definitely hard to convey, especially if you're terrible at post-production. Right?
Yeah.
Like, I don't know.
Well, let's move into our last call. So kind of the last question I want to ask a few guests And can you share a win and a loss from this week?
Oh man. Sorry, I'm prepared for this. But win and a loss. You know, the thing about my style of investing in real estate is that I'm not active, right? I'm just buying one property every year. So for me, you know, once I find that property, my stress is over for the year.
Yeah.
Right. As soon as I deploy all my money, and I think the next step is like once you run out of your money, then you have to go use other people's money. I'm not really at that stage yet. I'm still just trying to deploy my money, and I'm having enough headache as it is just trying to use that money to invest.
Yeah.
So for me, most of my time is just honestly, it's pretty chill. I would say it's definitely on the passive side. So I don't really have real estate investing wins, losses on a weekly basis. It's more like maybe one per year or whatever. But let's see, wins or losses.
Well, how about another question then?
I have to take a pass on that. Or skip.
Is how can someone add value to you right now, or what are you looking for?
Yeah, you know what? I'm mostly just trying to connect with other investors, right? Like I want to see I want to hear from other people's what their opinions are, because I'm not really in a place where like I'm getting feedback, because I'm not really interacting with investors like on a daily basis. So a lot of what I'm looking for is just feedback on my, you know, approach. Like, here's my approach. What's yours? Like, and why do you think yours is better than mine? I need some of that so that I can refine mine and like try and get better. You need a lot of that. And so that's social media has definitely helped. But yeah, I mean,
okay. So meet new investors, and where can people find you to then reach out to you?
Yeah, again, TikTok is YouTube, because I'm trying to grow the YouTube channel. It's Invest Like Mike, but it's one word. So there's some other guy who took my name with spaces, and everybody keeps subscribing to him. It's kind of annoying. But he must be wondering why he's like getting some followers. But his account's been inactive. But yeah, TikTok and YouTube, Invest Like Mike, no spaces.
Okay. So I've also linked that down below. So if you're watching this on YouTube, it should be linked in the description. If you're on Instagram, you should follow both of us on YouTube, because that would mean a lot. And if you're watching this, whether you're live or on the post play, thank you so much. Now would be a good time to hit the like button and subscribe. And if you want more content like this, let me know who I should interview next. But Michael, I really appreciate you jumping on.
Yeah, thanks for having me.
Breaking down cost segs. I mean, for me, the social media side, I love talking about posting and content strategy.
Yeah, there's so much strategy out there. It's insane.
Well, we need a refill, so I will catch all of you all later. Cheers, man.
Okay. Cheers.
Bye, guys.
See you guys
on YouTube.